Hello guys. Um, it's your boy Aikido here. So I just want to talk about the framework for a reversal post NFP. So as you guys know that I don't trade at the NFP anymore. I just wait for the reversal or retracement, whatever you want to call it. So basically, these are the this is one of the frameworks that I like. This is one of the signatures that I look for in price when I'm anticipating the retracement. First of all, I look at external range liquidity, which is liquidity outside of the previous day's trading range. So here you can see the previous day's high, previous day's low. So anything with the in between here, like the lows here, the highs there, those are internal range liquidity when you're trading in this day. This is internal, and as you can see here, this was during NFP. We took out the previous day's low, and on 1 hour I think there was a hard time frame PDRA in the form of an auto block, as you can see there, right there. We hit the auto block and then retraced. So I wait for a specific time, silver bullet time, 10 to 11 a.m. New York time. Especially if I had like a bearish week, I anticipate the TGIF, a retracement back inside the weekly range. If we've been bearish the whole entire week, I anticipate like 20% weekly range retracement, right? We retrace back inside the weekly range. If we've been bearish, you're gonna go back inside 20%. And then if you've been bullish, maybe let's say we've been bullish, then I anticipate the retracement, 20% retracement. And you can see here, this was the low of the week, which was made on Wednesday this week. As you can see here, during NFP we traded at discount. This is weekly discount, by the way, because we're already inside the weekly range, right? So there was a PDRA in the form of a bullish order block, and then you saw here this was a bullish microstructure shift. If I took this low here, and we also took like a weekly low, but that's not what I want to highlight here. This is the signature I look for in price, right? If I'm gonna trade an NFP, this is one of the best signatures that's gonna give you a good TGIF. So it's accumulation, manipulation when you're trading below the sell side here, and then you start distributing higher. So when I saw this is what I looked, and this is what I saw in basically all the indices today. Even NASDAQ showed the same thing: accumulation, manipulation to an external. We took out external liquidity at 8:30 because you wanna. At 8:30, what you wanna see is you wanna check. You wanna look left to see and annotate the most obvious liquidity that you're gonna take, and then from there you want to see a bullish market structure shift if price took out sell side, a bullish market structure shift in a small time frame, then a fair value gap to take this thing high. As you can see here, clearly shown here, but you need to factor in one of the most important things when you're trading: time, right? So at the right time, you want to see price trade back inside the fair value gap, which was the silver bullet time here. As you can look down here, look. This was a good buy, right? If you don't trust this buy, you wait and you want to see a certain reaction on a smaller time frame once it hits this bullish, this BC, right? And then during the silver bullet, the fair value gap that's going to be formed inside the silver bullet, that's your silver bullet then, because already here the sentiment is clear that you are bullish now, right? And then you just target any, because this is now distribution. Obviously you're going to have a more longer price leg than this manipulation, because you just manipulate to take out the sell stops here, which was previous day's low, and then we rallied up. So I want to make like a short video, a very short video, but this is what happened on basically all the indices today. As you can see, this is NASDAQ, but I already have an annotated chart, so this is what I'm going to do. I'm just going to show you, and I'm going to take you through what happened, transpired today. So this is NASDAQ. Nasdaq took out a monthly relative equal lows. Let's go to monthly so I can show you guys. So on monthly we had this. Let me just zoom out and take them out a bit. On monthly we have these relative equal lows. I think we also have them on US 30, right? These lows here, basically what the market sees when they see the wicks like this. These are gaps. This is where real liquidity is lying, right? People are putting stop losses and whatnot. People that are long, they are putting stop losses here. This is where the real liquidity is, and the algorithm sees these wicks as gaps, right? So that's why we traded down to these. We took these out, I think on Wednesday if I'm not mistaken. We made the low of the week, but we referred back to them during NFP, right? As you can see here, this is what I want to show you today, my framework for this setup. So we took our previous day's low. Sorry about that. We took our previous day's low. As you can see here, this is previous day's price. In between these two vertical dotted green lines or blue lines, this is previous day's high, previous day's low. This is external liquidity, took it out, and then we also referred back to the monthly relative equal lows, right? And then we formed SMT with this is US 30. I'm sorry. We formed SMT with Nasdaq. So I'm gonna go to Nasdaq now. Nasdaq made a higher high, but basically did the same thing because it also took previous day's low, and then referred back to weekly sell side, right? It took out this previous day's low, and then we hit this 1 hour breaker. Sorry about that. I think let's go to 1 hour so I can show you guys what I'm talking about. I just want to make a very short video today, so you're gonna have to watch this video a couple of times so that you know get what I'm trying to say here. There we go. And then you're going to see rejection. Mind you, we've been bearish the whole entire week, right? We've been bearish, and now you want to see like a retracement back inside the weekly range. So an NFP was just a Judas swing after accumulation, which is manipulation. Judas swing, and then now this is the real distribution. Sorry about that. So let's go back to I wanted to show you this breaker here and an order block also. These two down close candles, an order block, and this up close candle is a breaker on 1 hour, right? That's a discount PDRA, and then we had this fair value gap, the small fair value gap. We couldn't reach it, and we started moving back inside the weekly range, right? So I want to show you look at the time this thing happened, right? So you have 8:30, which did the damage. You took sell side, and then you created bullish market structure shift. Now this is the basic. This is 2022, by the way. This is 2022. This is 2022 model. This is the 2022 right there, right? 2022 bullish market structure shift, fair value gap. Then at 9:30 we traded back inside this fair value gap, right? And then we also came back, referred back to it one more time at 10 now. At 10 and 11, this is a super bullet hour. Created a new bullish market structure shift after we took sell side there. Sell side, bullish market structure shift. We got a bullish order block and a fair value gap, which is a strong model. You see this fair value gap. This is a super bullet. This is the first fair value gap that was formed on 5-minute time frame in this hour. So this is a silver bullet, right? And then you target low hanging fruit. You can target the highs here, the highs there. And as you can see here, I said the new week, because I also have this new week opening gap high, new week opening gap low, and then the new week opening gap CE, right? Basically what this is an opening price on Sunday and the closing price on Friday, right? Let's go to, let me show you guys what I'm talking about. There is it there. So the low is the closing price on Friday, then the high is the opening price on Sunday. I'm of course using New York time, that's why I'm saying Sunday, right? If I was using South African time, it's going to be Monday, right? Okay, I'm not there. So, and then this is what this is what it gives, a much longer price lag than that of NFP, and you can make more money trading the reversal than this here, right? And this is gambling because it could just swing up and then retrace, and then we want to see what price, and this is manual. This can be manual intervention, meaning they can just manually, during this time window where there is a high impact news, they can literally say, no, let's push the algorithm. They can code the algorithm to go either up or down. So you don't want to be involved, you don't want to gamble during this, so you wait for a reversal. It's going to give you more money than this if you apply the same leverage that gamblers do during this time window. Okay, so let's go to US30. US30 I think was the more, okay, here I'm just showing you all of them. This is the SMT, I think you can see it there. So US30 came back, it made lower lows. Let me go back to US30 because US30 came back and took out this 830 low. Let me just take this out. It came back and took this 830 low during the silver bullet. Then this was a breakaway gap, of course. And then what someone might ask him, why did you take this fair value gap as a silver bullet and not this one and not that one? I think there's another fair value gap on 3 minutes here, because there's a breaker here. I'm not expecting US30 to be to reach down for these fair value gaps down here. I can expect this, either this one or that one, but I was gonna enter on this one because of this breaker, and then put my stop loss below the CE of this one, right? I'm not expecting it to violate these PD arrays, all right, because of this breaker. And it was already a 6-6 approach because it made SMT divergence with NQ, meaning when Nasdaq was already up there, it was still taking out this low, and Nasdaq didn't shoot. It was just pulling it up. So I wasn't expecting it to reach lower for this discount PD arrays of this price leg. 1, 2, these are the most important factors. So you can check your Nasdaq didn't come back for this low it created at 8:30, between 8:30 and 9:30. I call it the 830 low. You see the SMT here, it didn't even come back to this fair value gap here, the 2022 fair value gap. It didn't come back even for it, and already it had made a bullish market structure shift by that time. So you know that it's highly unlikely that it reaches it. It's gonna come for these fair value gaps down here. So I want to show you guys another example with US30 because it was also a 6 sister in a way. Let's go to S&P 500. So S&P 500 did the same thing also, but this is what I want to show you guys, because I was looking at it and I said, oh, this is nice for a short lesson. Actually, this is what made me make this lesson. So it took our previous day's low, 1 hour order block, similar structure with Nasdaq, and then this is 2022. Let me just say, this is a 2022 model, an entry that you get before 10 and 11 after a break in market structure. We took sell side here, bullish market structure shift, discount of this price leg is this fair value gap, and you got this order block, right? So this is a good entry, and look at when it traded back inside it during 10 and 11. Here it was just failing to reach for it. It failed to reach for this fair value gap a couple of times. It failed there, and there, but it eventually came for it. So for a silver bullet, because you want a fair value gap that's created during 10 and the time window of 10 and 11. So here we had this fair value gap. I was going to take this one. Why? Because of this here. If you look at this fair value gap, which is in form of sell side imbalance, buy side inefficiency, right? If you look at this fair value gap here, now I'm going to go a bit slow. When we made a bullish market structure shift here, we traded to the main threshold of this, right? And then we traded back down, right? So now this is a balanced price range. This is now a balanced price range. This range here is now balanced, right? We traded up and then down. This is now completely filled. So once we break above this BPR, let me just extend this line. The only inefficiency we have now is this one. This is the only inefficiency we have now, right? And then here we traded above that inefficiency, right? Let me just put this back here. This is now a BPR, a balanced price range, right? Price has been filled. If let me just do this, put this on the left so it's visible. There we go. Change the color also. Let me change this color to, let's take what, red. Let's take red. Yeah, I think red is going to be visible. Yeah, there we go. So this is the premium and the discount of this CB. So discount prices has been completely filled. But now again, this inefficiency that is left here has its own premium and discount. If I just take sorry, I wanted to take the fib. If I can just take my fib and get the center of this, so I can have premium and discount of this. If I'm bullish, now listen folks, if I'm bullish and I'm 660 approaching this, if I'm 660 approaching this S&P 500 during the silver bullet hour, I want a silver bullet. Why am I taking this fair value gap and not this one and not that one? Here I have already filled this inefficiency effectively, right? So it's now completely filled. Has been efficiently delivered here. So we have this premium that has it's a premium of this whole thing, but also now we have it as a premium and its discount, because this is the only CB that's remaining, so side imbalance by side inefficiency, right? And here I have a discount. I'm going to separate the two here. I have a discount and a premium of this, right? Which is 75% of this, right? So let me just say 75%. If I'm bullish, once we trade above it, once I trade above it and I have if I want to have like to get a silver bullet, once I trade above 50% of this, which is equilibrium, right? Let me not use 75%. I'm going to confuse a lot of you here. This is equilibrium. Once I trade above equilibrium, right, I only have one PD array or inefficiency at discount here in the form of a fair value gap, and this is it. And mind you, Nasdaq is already up there, it's flying up. So I'm 660 approaching this thing right there. I'm 660 approaching this, and there is this silver bullet on USD, but look at Nasdaq, and around the same time it's already up there, right? So, and this is the only inefficiency I have at the discount of this area, right? Let me remove it now so you guys can see. That's how I was going to take this for my silver bullet and put my stop loss below the CE of this fair value gap, right? Aim for this low hanging fruit, and then if I'm overzealous, then I can also obviously aim for previous day's high. And then how do you get that 20% weekly range? Maybe someone might ask you, how do I know that it's retraced 20%? So this is how you do it, right? You go to a weekly time frame, and then I'm going to use Nasdaq for example, right? So on weekly, let's say we've been bearish. Okay, now we've turned bullish. Let me go to S&P 500. S&P 500, let's do it. Let me use US30, sorry. I wanted to use US30 for example. S&P 500, I'm sure it's also bullish now because this thing has been retracing. This is a serious retracement. Let's take US30. Any US30, any Dow Jones. Let's take this one. So this is what happened, right? So let me just remove all this. So this is how you know. Let's say, because you see we took those monthly relative equal lows on US30, right? These relative equal, they too clean. Price needs to come back and take them out. Anyway, taken out. So once you take them out, and you can see here, right? These are the monthly relative equal lows I'm talking about here. We referred back to them during NFP, took sell side, and then came back again for the 830 low, bang, and then we started creating a bullish market structure shift. So we traded back into this, inside this. Don't look at this and think this is this is on a weekly. This is how it looks like. We retrace back, but we're here, folks. We're here, and then now we are there. So this is a TGIF. Basically, it's a setup that you find on Fridays. It's called Thank God It's Friday. If we've been bearish like how we've been the whole entire week, once the hard time frame objective has been achieved on Friday, you expect a certain retracement back inside the weekly range, right? So you can have this candle's tail, which is a wick. So what you want to do is, let's say we are still trading towards the hard time frame, draw on liquidity, and then we hit it maybe during New York AM or PM, could be, but most of the time it's going to be London or New York AM. Then we retrace towards the end of New York AM or New York PM, and then you find the silver bullet there that's going to take you back inside the weekly range, which is exactly what happened today. So these are how you measure it. You just take your fibs, put it at the high and the low, and then here I only have 1%, 50%, and 0. So I'm gonna go to my fibs, and then I'm gonna activate the 0.2, which is 20%. Then this is the retracement. This is overzealous. Normally it takes from 20 to 30% of the weekly range. So just go to your settings, and then this is what you anticipate. This is how you know, okay, from here to there. If you go to M5, it's a small price movement, but it pays the bills. Definitely does pay the bill. And then if you have like a drawn liquidity on high time frame, these are the levels. Small retracement back inside the weekly range. It pays the bills for sure. That's what I wanted to show you guys today. I hope you learned a thing or two. I don't have time to be slow. I think I highlighted everything that I wanted to highlight here. And yeah, until we meet again, guys. I hope this was insightful and very informative. Yeah, that's it from me today, guys. Have a good night.